All right, and we are live. So welcome back to Dapp University. So today we got a lot to talk about in this week's live stream. We're looking at another major cryptocurrency exchange that could be in some serious trouble, okay? And what you have to understand about that in this video, because, we've seen a ton of crazy stuff happen in this space in crypto this year with major exchanges like FTX going under, okay? And all the fears that that's, had for the entire industry and other people that could be affected by this. So we're talking about that in this video today. We're going to look at a lot of the updates that have happened in this space since our live stream we did 1 week ago from today. Again, we're doing these live streams once per week on this channel about this time on Mondays, okay? So subscribe, turn on notifications. You're going to find out about those whenever we go live. We'll probably take a quick look at the crypto markets and answer some of your questions and a whole lot more. So if you're new around here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's what you're interested in, then smash that like button down below for the YouTube algorithm. Subscribe to this channel. And if you want to become a blockchain master step-by-step start to finish, definitely head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jump in the chat here. We got David Stone, RB Reviews, NFTs, Crypto, Dale, the Above Realty, Arion, Mr. Pickle, Decibel, Automatic Beats, Jankoa, hope I'm saying that right. Welcome. All right, so let's jump into this. Let's talk about another major cryptocurrency exchange that could be in some serious trouble, okay? So again, like I said before, 2022 has been a crazy year for crypto. We saw, SBF and FTX absolutely blow up, and that's had, caused lots of other fears about other players in the space, like, hey, who else is, going to be in some hot water? Well, right now, we have a significant amount of concerns going around about Binance itself for a couple different reasons, okay? So one is that U.S. prosecutors are looking to charge Binance executives, Binance and executives on possible money laundering violations per Reuters, okay? Talk about that here in a minute. But going beyond that, we have a very similar fear as to what's happening with FTX, which is Binance's proof of reserves, raising some red flags about are all of those funds inside of there. Okay, so those are two different things, but they're also super important. So let's kind of first look at each one. All right, so excuse me. Sorry, everybody. I'll try to mute myself whenever I cough. I got a little bit of something going on here. Hopefully, I can get this cleared up for the holidays here, but anyways, let's jump into this. So basically, U.S. prosecutors are considering criminal charges against crypto exchange Binance and individual executives, according to, including CEO and founder CZ, as everyone would know him, all right? Per the Reuters report, signing two people. So the Department of Justice also discussed possible plea deals with Binance's lawyers, okay? Prosecutors and the U.S. Attorney's Office in Seattle began investigating Binance back in 2018, and after a span of cases, saw criminal use of Binance treasure illicit funds, according to Reuters, okay? So this is something that's actually been going on for a while right now, but it's actually coming to a head, okay, amidst all this type of stuff. Because that's the other thing you have to understand about this in crypto. There's a lot of people that kind of get in this space. And again, I'm not like weighing any value judgments, okay, on what's happening here exactly behind the scenes with Binance. I don't know exactly what's going to happen with them next. I don't know if this is all FUD or if this is something that actually has a ton of backing behind it. Okay, we're gonna wait for the legal system to decide that. Excuse me. But this is definitely part of the conversation that you have to keep in touch with if you're trying to stay 2 steps ahead in this space, because these are some similar types of concerns that we saw with SBF and FTX hit the scene before everything came out that like it did. So you always want to keep one ear to the ground and, try to see what's actually behind the scenes, something like this. But anyways, this has happened for a while. But the thing you have to understand is, like, whenever you do things in crypto that, potentially violate laws, okay, like sometimes it can take some time before, the legal system actually catches up with the justice system, I should say, actually catches up with you, and you start to see real ramifications for what you've done in a legal sense. So, for example, like, if you go out there and have an unregistered security on chain or something like that, like you might get away with it for a long time, right? Until you don't anymore, right? And then that could be years down the road, and you could think that, I was able to do something like this. It's no big deal, and everybody else kind of follows suit because they watch everybody else get away with stuff for some time. But then, you see things really come to a head, potentially years down the road, and that could be potentially a case of what we're seeing right now. Okay, but the bigger issue is not just the legal hot water. Okay, because I think at the end of the day, like, people could face certain criminal charges, et cetera, but the exchange itself could continue to operate, right? Like, there's nothing that says that like the sitting executives have to continue to be the sitting executives. They could always be replaced, all that type of stuff. But the real question is what's going on behind the scenes with Binance's actual funds, and I think that's the bigger sort of scary issue for most people. Is will we potentially see a repeat of what happened with FTX, either on a full scale or a small scale with Binance? So, anyways, again, I'm not saying whether the concerns listed in this particular report right here about proof of reserves have any real founding. Okay, I'm not trying to say that this is an issue. I don't know if it's FUD, but this is something we definitely have to be keeping track of more and more. Because right now there's a push for exchanges to publish proof of reserves to say, hey, we actually have these crypto assets that we say we do, okay, because everybody's scared that people are just taking deposits and then, going off doing things with them behind the scenes, and we don't know if actually some money's there. So right now we're seeing is a push for, okay, we're an exchange, we've taken your deposits, you can see it on chain, here it is, but there's concerns with these audit reports that there's actually the funds there that say there are. So anyways, Binance's efforts to improve transparency of its reserve also exposed red flags in the exchange's finances, according to accounting and financial specialist consultant with the Wall Street Journal. We saw this originally put out in the Wall Street Journal. Okay. Basically, as noted by former Financial Accounting Standards Board member, an investment manager, the report released by the audit firm, everybody, did not bring investor confidence about the exchange's finances, okay? Its lack of information related to the quality of internal controls and how Binance systems liquidate assets to cover margin loans. So basically, another red flag that raises the newspaper sources regard the lack of information about Binance's corporate structure. So according to the report, Binance's chief strategy officer was unable to name Binance's parent company as Binance has been going through a corporate reorganization for almost 2 years, okay? So anyways, difference between the total Bitcoin liabilities were also highlighted, and this is one of the big sort of scary parts right here. The exchange's proof of reserve shows that Binance was 97% collateralized, excluding assets lended to other users through loans or margin accounts, indicating 1-to-1 ratio of reserves to customers. Assets was not achieved. So basically, he states about the difference. We found that Binance was 97% collateral without taking into account the out-of-space assets pledged by customers as collateral for the in-scope assets lent through the margin loan services, resulting in negative balances on the customer liability report. Okay. And then a couple of other differences that they noticed down here. So anyways, I won't go through the entire thing. So but this is a concern that, is floating around. This is something that we have to kind of pay attention to, and we need to improve the quality of these transparency reports for exchanges if people are going to continue to use them, because I think that's one of the best ways for this industry. If you're going to actually accept customer deposits, is that we have greater transparency into what they can do. I mean, that's the benefit of creating blockchain technology in the first place, because that's the thing you have to understand. Anyways, I put a link to that in the live chat if you want to get to that full article. That's the thing you have to understand. Like, there's a sliding scale of the benefits of blockchain technology, right? Like, if you could do everything on chain, you have everybody who has a crypto wallet and uses dApps directly and only spends funds out of their wallet, okay? And then you get like trustlessness, censorship resistant decentralization to all. You maximize that by using a DEX. You maximize it by having funds in your wallet and only swapping, whenever they leave your wallet, et cetera, et cetera. But that's a sliding scale, right? Like, you can still use things that are more centralized and a more hybrid approach, but still get some of the benefits of using the chain itself. So like using a centralized exchange, of course, has a significant amount of centralization to it. But how you can use blockchain to improve that problem is to have transparency added to that and auditability, where, okay, you're still using this centralized thing, but we can still easily, openly audit all the deposits into this thing. We can always basically see how much money's actually there, okay, what it's being used for, and we can track that. And that's a way that you can still use the chain to get a benefit of blockchain and Web 3.0 without making everything completely decentralized. And I think that's the thing we're trying to push for, and to make those audit reports even better, to where at any time, an independent third-party analyst could look at those and determine whether those funds actually match what they say they do. So that's the direction that I would like to see things move towards. I think they are, but we'll have to see how this particular problem plays itself out, okay, and whether this is something that we're going to have to, you know, have to worry about. Now, my quick 30,000-foot view take is that I don't think we're in a situation where we're going to see this absolutely blow up, okay, and turn into another SBF FTX 2.0 scenario, okay? At least I'm hoping that's not what the case is, but it doesn't look like that's what we have to worry about just yet. But if I see anything that resembles that, I will definitely be the first to let you know. So let me know what y'all think down in the comment section below. Somebody's talking about holding most of their balances in a cold wallet and then using exchanges mostly for trading purposes. Yeah, that makes sense. And again, nothing I've said in this video am I designing to say that this is the truth, this is exactly what's happening right now, and that this is exactly what's going on the scenes with Binance. Again, this is what's being talked about right now. This is one of those details that I'm waiting to come out and see. So time will tell. We have to see more about whether these allegations are accurate or not. Okay. And I also want to be very clear about that because I'm not trying to just spread FUD either, but I do want to bring this up in case it becomes an issue for anybody down the road that you should know about it before. Okay, so let's look at a couple other things that have happened in the space since our live stream last week, because there's a couple cool things that you want to know about. One is, of course, everybody's been talking about OpenAI and ChatGPT, GPT-3, all that type of stuff. So I did publish a video on my YouTube channel on Friday, showing you how to code applications with ChatGPT. So definitely go check that out if you haven't already. And actually blockchain-based applications. It's specific for blockchain. So that's pretty cool. I mean, you can use it to write smart contracts. And my quick take on this, people, go check out those videos. People have asked me all the time, like, hey, is AI going to replace all our jobs, et cetera, et cetera, et cetera. Not right now, okay? What's cool about those is it's going to make good developers more effective, okay? But you have to have some skills, all right, in order to understand if it's giving you the right answer or not. Because it's a language model. It's not going to just like give you the code and then try to compile it and run it itself and see if it's actually working. You have to check it. You have to fact check it. And the only way that you're going to be able to effectively fact check the AI's answer is basically if you understand the answer that it presented to you. So, for example, if you don't know how to code at all right, and then you use ChatGPT and it spits you back code, that code might look plausible to you, but if you try to copy and paste it and compile it and run it, and it doesn't work for some reason, you're not going to know what to do. So that's why it's not going to completely replace developer, because it would still take a developer to understand whether the answer is right or not, how to fix it. Okay, so that's what you have to understand about that type of stuff. So anyways, I want to bring that up. Definitely go check that video if you haven't already. But let's look at a couple other things that have happened in the crypto space, because there's a ton of cool stuff coming down the pike. Let's see. Try to pull up this article here. So we got an official announcement towards the end of last week about Starbucks is officially launching their NFT program. All right. So what is this and why is it important? So Starbucks sees unprecedented internet as Polygon NFT rewards platform takes off. Okay, so Starbucks is issuing their own non-fungible tokens or NFTs on the Polygon ecosystem, and they're actually launching this for Starbucks customers. So let's take a look at this, what it is, why it's important. So Starbucks Odyssey, so the coffee chain's new Web3 rewards platform, is built on Ethereum sidechain network Polygon. So it's officially rolling out to the world. in January of 2023 for beta testers. Okay, so what's the 30,000 foot view here? I'll put the actual Starbucks release here. All right, this was put out on December 8th. Let's see. I'm not sure if this will let me paste it or not. Can y'all see me okay? My browser froze on me. Can y'all see me okay? Okay. Anyways, so my browser froze on me. Sorry about that, everybody. So Starbucks Odyssey begins. Again, I put this out on this came out December 8th. So sorry, get my train of thought back together after I had this technical difficulty. Anyway, Starbucks issuing their NFT loyalty program. All right. Beta group launches January 2023. If you want to sign up for it, go to this story.starbucks.com URL that I put in the live chat replay right there. And definitely go check that out. Okay. So why is this a big deal? Well, number one, we're seeing one of the biggest, this is an absolute major player getting into Web3 in a pretty serious way. And, it's also getting into non-fungible tokens or NFTs in a pretty serious way that's not just like digital pictures on a blockchain. Now, I'm not hating on NFTs, like the crypto collectibles, okay? But if you've watched my channel, like, my long-term view is that there's so many use cases for non-fungible tokens outside of just, digital pictures on a blockchain and collectibles, all right? So, you can talk about intellectual property rights, physical real estate, all right, ownership of physical objects. And one that I've touched on briefly before, but haven't touched on a ton is, loyalty programs and letting brands connect back with their customers in a unique way. All right. And that's exactly what's happening here with Starbucks Odyssey in January of 2023. So that's really just 1 month away, just around the corner. Okay. And if you want to sign up for it, definitely go check this out on the Starbucks website itself. So here's the other thing. If you drink Starbucks coffee at all, like ever, like even if it's like once a month, it's worth, checking out for sure. Okay. Because you could be an early adopter to this. If you're going to go to Starbucks anyway, might as well get an NFT for, your loyalty to the company and see what happens with those long term. And so the other reason it's a big deal, because it's such a big player, if this is actually successful, okay, there's we're going to see more people do this, right? If Starbucks pulls it off and they find that it is valuable at retaining customers and increasing their profit in any way, then we're going to see other people do it, okay? And if other people do it, what's going to happen is they're going to learn from what somebody else did, and they're going to improve upon it and find new ways to increase customer retention and profitability over the long term. And then that will snowball somebody else doing it. And then we'll just see this much more widely adopted and refined. It's sort of like whenever these new sort of business models come out or these new business tactics, it takes some experimentation, but then eventually somebody writes the playbook for it, and then everybody gets a hold of the playbook. And then we see that sort of widely take off across the internet. Sort of like when you saw NFT drops happen the first time, right? We saw CryptoPunks kind of do their thing. This is way back in the day. Like CryptoPunks, right? There's some other ones like Mooncats and others that were super early to the game, right? But then like as the steamroller really started to get going, like we saw Bored Ape Yacht Club happen and how successful that was and the community that was built around it. And then that's what I'm saying, like you write the playbook over time, 2 or 3, 4, 5, 10 people like really nail it, and then we all learn what works, and then everybody just copies it, and that's how NFTs blew up. We could see a very similar thing happen with NFTs and mainstream adoption for big brands and customer loyalty programs. So we'll see. Okay, so speaking of stuff that's coming up on the pike for 2023, we're looking at a target date for if Ether unlocks. So what is this? Why is this important? So, Ethereum switched to proof of stake earlier this year. All right. Completely proof of stake, no longer on proof of work. All right. And one really strange thing about that is that even though it switched to proof of stake, everybody who's staking their Ether on the network can't withdraw it yet. All right. And so we knew this was going to happen. I talked about it for a very long time. Basically that, you could stake your Ether on chain, but it's a problem. It's a one-way street for an undetermined amount of time because you send your ETH. This was back before we actually merged, like send your Ether to the beacon chain. You lock it up, you start your validator, wait for the merge. And then after the merge happens, like someday you'll be able to withdraw your Ether back onto the market. Now, we have a target date set for March of 2023 for the release of staked Ether, okay? So basically, that's pretty soon. And this is actually a pretty big deal. I'll explain why in a second. But I have to understand, depending on when in March this is, we're closer to that date than we are to the merge in the past, okay? So, well, let's see here. Yeah, if it's early March, if it's before, what's today? Today's the 12th. Well, let's put it this way. We're about the same distance to that day as we are for the merge in the past. So this is pretty soon in the grand scheme of things, the whole point I'm trying to make. And why is it significant? Well, yeah, it's cool that Ethereum's shipping its roadmap, shipping its updates. We're actually seeing them make good on their promises, and it's not going to be some crazy long day in the future. But it's important because there's a couple reasons. One is that once staked Ether actually becomes liquid on the market, in my opinion, that's when you could potentially see more people start to jump on the ETH train to hold it for the long term and actually stake it, okay, which could drive Ethereum or Ether demand, all right, which, of course, not financial advice, not telling you to buy or sell any ETH-based information, but could be a pretty significant part of Ethereum's price or Ether's price going up over the long term. So here's why. Right now, Ether has a ton of value proposition, right? Because it's a very blue chip crypto asset. It's the largest smart contract developer platform. It's got, it's got the largest user base. Layer 2 scaling solutions trying to take off, which basically means Ethereum adoption is continuing to take off like a rocket ship if you factor in layer 2 activity. And then you can buy Ether and stake it to earn a passive income reward by locking it up in the network and this most active, widely used network in the crypto ecosystem, all right? So those all, and also ETH's basically going to be deflationary over the long term, right? It has its deflationary periods right now, but it's not net deflationary just yet. It will be, assuming that activity picks up more than it is now, which I anticipate over the long term. So anyways, there's lots of reasons why you want to hold it. One of the downsides is you can't really stake Ether without locking it up. Now, once that sort of headwind gets removed, that's when you can see more people actually want to do it because, well, if I want to stop staking, I can just instantly stop, right? Right now, you can't instantly stop. But once that, takes into account, then boom, that's going to help a lot more people. Not to mention the fact that this is most likely coming. Nobody's got a crystal ball to know what's going to happen with the market, but this is most likely coming in one of two places, all right, in the crypto market life cycle, at or around the bottom, all right, of the market, or in some type of accumulation phase before the next uptrend, or / it's in the early phase of the next uptrend, right? Now, I don't know. Nobody's got a crystal ball to know exactly what's going to happen in the market, but in my opinion, the odds are in favor of March 2023 either being one, at or around the bottom of the market, or number two, in an accumulation phase / beginnings of a new uptrend, all right? And so if that's the case, lots of smart money is going to be sitting there going like, this Ether thing with all this crazy activity, all these use cases, let's just say we're even roughly close to the same price, like you're looking at a 4x return on investment just to get back to its all-time high, you know, you probably think that ETH's got multiples of its all-time high, you know, in potential for the actual asset over the long term. And then I can stake this thing all along the way, right? I can start accumulating, and then I can start stacking ETH and start staking it, and then just earn yield natively in a relatively safe way compared to other crypto alternatives while it's going up in value for the next trend, however long it's going to take. Like, that's incredibly attractive. And the timing for this could be pretty crazy. Pretty crazy. And you have to understand is, like, in order for, like, bull markets to get really frothy and to get, like, for trends to actually emerge, you have to have a confluence of a number of factors that are positive for the entire space, that have this synergy to cause this type of bubblish explosion, all right? And this could be one of those factors that sort of operates within that cornucopia of influences. So somebody says, highly doubt CZ is anything close to SBF. So I'm going to be very clear in this video. I have not tried to make any comparisons to CZ and SBF. What I'm saying is people have PTSD from SBF, okay, and could be potentially projecting that on this situation. I'll be very clear that I'm not trying to make any judgments on any particular characters behind Binance in this space. I'm mostly letting you know what the reporting is saying right now and what the concerns are on the street and what you should pay attention to, okay? So the next question is, will we actually see a March withdrawal date? That is a good question. All right, so some other things to definitely pay attention to in terms of a macro scene. Again, crypto does not exist in a bubble, right? I say a bubble. I don't mean a speculative bubble. What I mean is a bubble is it does not exist outside of other influences, right? It is not its own standalone ecosystem. It's highly influenced by macroeconomic factors, as we've seen this year, you know, with massive headwinds, okay? With you know, with the rapid change in interest rates, okay? So speaking of which, we kind of want to continue to take the temperatures with the macro scene. And one important thing is to understand is we have another FOMC meeting this week, all right, to determine what the next move is basically going to be from the central bank in the United States, okay? So this week we've got FOMC meetings on Tuesday and Wednesday. We're going to see, you know, basically how much we're going to do in terms of rate hikes next, and then see, you know, what the sort of prevailing monetary policy is going to be over the coming months. And the real question is, are we going to start to see any type of easing from the central bank? All right, we're going to see a slowing of rate hikes at all? All right, we're going to have more aggressive rate hikes. Are they going to slow down? Are we going to start to see any type of accommodative monetary policy? That's the real thing to watch out for this week. And again, it's not always about what hike they decide they're going to do next. You know, everybody's always diagnosing what, you know, the Fed chair is saying after the meetings and what other chair are saying, right? To try to say, like, let's just try to, like, you know, put our finger to the wind and see, like, is there something behind what, is there subtext that's hinting at what they're going to be doing over the next coming months, rather than the actual words that they're saying coming out of their mouth and what the surface level meaning of those is. Try to forecast, are they going to be more restrictive in the coming months? They're going to be more accommodative. That's going to be a thing to watch out for this week. We could see some volatility around those types of events in the crypto markets. I know crypto's always volatile, but particularly around, you know, FOMC. meetings, we typically see some volatility in the stock markets and also in the crypto markets. So that's something to watch out for this week. JPAR says Fed pivot, Tether, and Binance FUD. Oh, yeah, almost ready for a rally. Maybe. We'll see. So we're still sitting here. Let's just take a look here. We got Bitcoin trading about $17,000. Uh-oh, that's not what I was looking for. Let's do my market cap. ETH back at 1250. Okay. Let me know what y'all think in the comment section below. Are we due for a rally? Are we going to continue to see relentless bearishness? Are we going to see some type of clear bottom emerge and then have a longer accumulation phase? Let me know what y'all think in the comment section below. In terms of timing of the markets, if you think about things in historical perspective, most bottoms in the crypto markets from past cycles, we're about a year away from the top. And so we're firmly over 1 year from the Bitcoin top. At this point, we're also firmly over 1 year from the Ether top. Counterparty risk says bearish. True says volume is pretty dismal. JPAR thinks small relief rally in January. Omic Contact says structural bear market, not a periodic bear market. ETH has never seen a real bear market. I mean, I don't know if you're saying ETH has never seen like a bear market in equities or like a recession or anything like that. That is true, but ETH's seen a pretty nasty bear market. I vividly remember the last one. Went from $1,400 down to $80. That was pretty rough. All right, everybody. That's all I got for you today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. It really helps these videos out so that more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you take a master cut entirely, I can master blockchain step-by-step start to finish over at dappuniversity.com/bootcamp. Okay? You have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching.